You're listening to Inside Real Estate, your source for all things mortgage and real estate related. The show that brings you all the hottest topics and insights directly from those who know it most. Now sit back and enjoy the show.
Sit back, enjoy the show. Paul Apostolakis, Salvatore Kuzmano, Brad Weisgerber. We are Inside Real Estate. We do not have a guest today. It's just going to be us. We're going to make this a quick show because there really isn't much to talk about this week, it seems like. But we'll try to make it somewhat fun. For all those of you that have found us, thank you. For those of you that listen to our show, thank you. If you haven't gone yet, go to irepodcast.com. You can go to Facebook.com/IRE podcast to see us live, or you can go to any podcast app, Stitcher, Spotify, or any of those things to listen to us on your drive home or to work, maybe. Other than that, please like, subscribe, and hit. Wait, I'm not done. Please like, subscribe, and hit the notification bell for us, please. What were you saying, Brad?
That is where most people listen to podcasts, is commuting back and forth to work.
Yeah. They definitely don't like. Yeah, but I guess that's when I listen to my podcast, right? And I don't listen to ours because we do it, right? Yeah, so, today I want to talk about a couple things real quick. We'll do like a market update. Rates are kind of ticking up, kind of dampening refinancing, and I don't know if it's going to dampen the housing market. I feel like things have kind of started moving again. And I want to talk to Sal about what he's seeing as far as the purchase or pre-approval situation for him, because he's a good indicator on what's happened in the market as he does so much business. And then also I wanted to talk about the future of lending. Are we going to see a situation where loan officers are not needed anymore? Are we just going to be like unneeded and then everything's be automated or on the blockchain? I don't know. So I kind of wanted to talk about that. But other than that, Sal, what are you seeing in the market, dude? I mean, I know that things are starting to tick back up as far as pre-approvals. We were talking about that the other day. I know refinances have kind of dried up. But there's still a lot of people that can refinance, I find. You know what I mean? There's a lot of people at 4.5%.
Well, I think a lot of people don't want to believe that rates are above 3%, So with that being said, like a lot of clients are like, oh, I'll wait for it to go back down to, 2.75 or whatever. And if you take like the first number away, or if the first number didn't mean anything, you just have to look at the math and see, does it make sense? It doesn't matter if it's a 2, a 3, or 4, or whatever. I mean, if your current situation is a lot worse and you can benefit by doing something, I think that's how people have to think. But the bigger thing, that I think is because, you can't really rely on refis. That's just like hoping it's sunny out every day, right? But the purchases happen rain or shine, right? So on that aspect, I've seen a ton of activity as far as new buyers wanting to get in the market, but I don't necessarily know that listings are loosening up any, and that's difficult. It's just continues to be top heavy with buyers, right? Like way top heavy. So it's interesting. I don't know necessarily exactly what's going to happen, but I think it's still a good indicator. Lots of people wanting to buy. The demand is high, and a good
demand is high. I don't think it's going away.
Yeah, it'd be really messed up if it was the other way around. If there's a ton of houses to sell and no one to buy, right? That's a worse situation.
Much worse. I agree with that.
Even though it probably sounds a lot better right now for most people that are in the market, but yeah.
It's kind of wild. If you're trying to buy a house right now, it's hard.
It's kind of wild to see. The house across the street from me went for sale, I think a week ago. And the amount of traffic, I live in a cul-de-sac, so there's not a whole lot of traffic. But the amount of traffic coming down the street just to go see this house is baffling. There's been so many showings on this house. It's been up for a week. It might be pending, I don't know, but the amount of traffic for buyers is wild.
Yeah, wild.
I have a seller who's buying another home, right? And he had 52 offers on his home.
That's so crazy. That's crazy. 52 offers is crazy. We've got an employee of ours, Amanda, who is putting her house up on the market. She put it up as like coming soon, and she's got like 10 appointments already, right? It's not even on the market really full yet.
She said it was like 19 appointments already, and it was just coming soon status.
Right. An interesting stat was there was a massive increase this year over year on cash out refinances. A lot of people pulling cash out. They've made a lot of equity on their house. Is that a concerning stat, or do you just think that's like, okay, yeah, people are pulling cash out more now? You know what I mean? I don't think it. For me, it doesn't really. I'm not worried about it personally, but what do you think?
I don't think it's concerning. I think it's kind of smart. I mean, I don't think we have the issue that we had years ago of overinflated values, where appraisers are just getting whatever value loan officers tell them to get, right? So I think there's been a natural increase in equity, a natural increase in values, and people are leveraging their house to get rid of shitty credit card debt. They're locking their money in at 3% instead of 29%. I think it's smart.
Is it smart? But then let's say they rack up the credit card debts. I mean, that's the worry, right? That's what happened back. People were using their houses. People are using their houses like ATMs, right? Pulling cash out, and eating away at their equity. But I feel like a lot of people have equity. But there was an interesting thing that I saw someone say, that for every 1% increase in rates, we'll see a 10% drop in values. So if we're to go from 3 to 4%, potentially we would see a 10% drop in overall home values. I don't see that happening because demand is so high. I don't believe in that.
Yeah, I think there's quite a lag between the two, right? Like, you're not going to. I mean, I think it will affect things, but the lag between the correlation is probably a pretty long drawn out thing, because I mean, like you said, right? There's so many people that you got to think of it almost like a paintball gun hopper. There's 400 paintballs in the hopper, right? And every time it fires out, it gets a home, right? But there's only like 10 targets. It's fucked up.
We really need to hire someone to just write down all of Sal's analogies.
I know, dude. And Sal's analogies
write a book, they're so good.
Buying a house is like a paintball gun. It's like, where is that going, bro? But no, dude, it's true.
It makes so much sense.
It makes a lot of sense. But it is crazy. Do you guys think that okay, so I'll give you an example. The other day I was talking to someone, their rate was 4.25%. And because their friend got like a 2.75, they would not take a 3.125.
Yep.
They just wouldn't take it. And I was like, how? But he's like, no, I'm just going to wait for them to come back down. Well, dude, we're talking about a super pandemic that came across and it depressed things. And like, why do you think they're going to go back down? He's like, I don't know. I'm just going to wait. And if they don't come down, fine. But so you'll just overpay for your home and just waiting for it. I don't think people understand the concept of how much they overpay for their house if they don't refinance.
Yeah.
You know what I mean?
Well, everyone who's like not in this business, sometimes, not everyone, right? But a lot of people just think they're like smarter than the market. And the reality is you're not. It's like saying like, I'm going to go to the casino and win. Like, you're not. You might get lucky.
You did. You got lucky.
Yeah, but I left. Like, but like the actual like thought that you're going to be able to like time it in well, like if you did, you got lucky. You're not some guru, right?
Right.
Mm-hmm. Like, man, I knew rates were going to go down. No, you didn't. They just did. No one's worried about you and about your house and your rate that you're getting, right? Except for you. Like, the market doesn't care. So, waiting is always typically a bad strategy if you need to do something. If you're kicking the idea around, I mean, that's your right to kind of, figure it out. But ultimately, like, if you need to make a move, like, wife's pregnant, whatever, you got to upgrade, are you going to wait for 1/8 of a point lower in rate?
I think it's stupid, even if you don't need to make a move, but you're looking to make a move and then something makes sense. I think it's stupid to wait, because if it makes sense now, take advantage, right? Don't shoot yourself in the foot.
Dude, the thing is you can always refi.
Exactly.
But you can if you bought higher than where you could have.
Yeah, if you're out of market, you can refinance.
If you bought today at 3 1/8 and it goes to 3.75, you made the right move. If you bought today at 3 1/8 and it goes to 2.75, I mean, I probably wouldn't refi over that, but let's say you did and you stay there 30 years, you save money, right? But people, it's just always like a cost, a fee, this, that. And it's like, dude, like, you got to time it, right? Because people in like a year or two are going to be like so happy they locked in at 3.75,
1,000%. But people get greedy. It's interesting. It's like everybody wants to time the market. Everybody wants to get in at the right point, and like, it's like trying to time a stock. How many times have you tried to time a stock? You buy high,
right.
you sell low.
I'm trying to buy it at the lowest, right? You buy it and it goes down, 5-10 points. I mean, it's just part of it, but you don't really lose, I guess, in that game until you sell, right? But like, there's so many people who are just think they're smarter.
Is it weird how many people are investing in the market right now? It's like I feel like everybody I talk to has got money in their Robinhood account. Like, I'm getting my hair cut, and the guy's like, "Oh yeah, I made money on this." And
for sure, it's
people
crazy.
in the office.
Well, it's trendy. It's trending. It's on Reddit. Like, big time. Like, everyone's buying stock. I'm buying stock. It's stupid. I'm gonna probably get smoked, but like, it is what it is. But honestly, it's like a slower paced casino. Sometimes fast paced, right? But like,
well, let's talk about that. What's more dangerous? What's more dangerous? Online gambling? Is online gambling more dangerous?
Well, I think it depends, right? Like, because here's the thing: like, buying a stock, if it's a good company, right, and you're not just buying into like a GameStop hype or something like that, right? That's crazy, dangerous.
Right.
You're clearly trying to make money off of like arbitrage and speculation. Yeah, like the ability to buy like GM or Ford stock or something like that and actually own a piece of it and hold on to it. Like, the risk you have of losing your ass is that the company goes bankrupt, right? But so you always have something to a degree. It's like almost like real estate, like your house isn't going anywhere. The value could get cut in half though if something happens. But the where people are getting,
you own the asset. You actually have an asset.
But I see a lot of people doing this that don't have much experience trading is buying options and puts and selling short, where like you lose your ass, like essentially you're like, okay, you don't like have to buy 2,000 shares of the stock, but you spent $2,000, right? Or $3,000 that gets wiped away in a matter of a few days. I don't think people even understand it. It's so complicated, and everyone's getting into them. It's not hard to get a, level 2, level 3 trader account or whatever, where you can trade options, and you get all these people.
The other day, I applied for a margin account. I don't have any business having a margin account, but I got it. You know what I mean? And it wasn't hard.
Right.
I just answered some questions, and all of a sudden, I can trade on margin.
People who are writing covered calls right now, unless it's on like a super risky stock, are making tons of money.
Yeah.
Because it's they like, that's a strategy for like giant investment firms, right? Like a lot of like hedge funds and things like that. I mean, they just make money on writing covered calls. It's like an income strategy, right? For a lot of their like clients, like, okay, we're going to take your money. We own, 30,000 shares of whatever stock. And we'll write these calls that people buy that are like very, very little chance of that ever happening. And people buy them all day.
You know how I have no idea, or how I have every idea that I shouldn't be in the stock market? The last 3 minutes of this conversation, I have no fucking clue what you guys are talking about.
But that's what people are talking about today.
Hey, but sign up and listen to me or Chad for 5 minutes, and next thing you know, you'll be riding some fucking Apple.
I've been listening to
walk into our office.
You and Chad.
Walk into the office around lunch. It's like Wall Street Journal in there. They're like,
hey, and in the end, we're like breaking even. It's not cool
every time. No, every time. But you're having fun. Breaking even is good if you have fun.
Truth, I guess. Not when it takes away from your productivity. But true. I can't imagine how many people are like working at like GM or like some salary job at home, and on one screen they got their Zoom meeting up, and then the other they got their stock account up. I mean, kind of like literally right now, right? Like I'm on this podcast, and then I keep refreshing on the other screen. Like, it's distracting. And you know what am I going to do? Make, a couple grand, maybe.
Something that used to be something that would require a professional manager to take care of your money, to put in the market. A lot of that's how it used to work. You had a guy and you tell him sell blah blah blah, right? And you'd always see the old school people like, I need you to sell 50 whatever. You'd have someone do that. In today's world where
it's either going to go great or it could go bad.
Right.
You know,
right.
Like I'm sure there's people who apply at Rocket Mortgage have an awesome experience, right? And I'm sure there's other people who apply and 2 days before closing they don't get it. You know, heartbreaking. So there's no like professional, and mind you, I don't know that whole process with them, but like if you want to have like a very high relative probability of success, you should probably have a professional do it. You know,
it'd be like climbing Mount Everest without a Sherpa.
I guarantee if I took the money that I put into my stock account and I would have given that monthly or, you know, whatever to an advisor, I would have way more money in my stock account. They wouldn't be making crazy risky plays, right? Like it'd all be invested very good.
You don't think you'd riot?
No. Fuck no, dude. Like, what are you, stupid?
Oh my god! And that's the thing. Like, so I was going to talk about that. Like.
But you wouldn't have nearly much fun.
I would.
It is like going to the casino, dude.
Vacation, you know, like when I would have taken the gain. Yeah, it is. True. But it's a casino that, again, like is bigger than you. I mean, I think that the market is a little more fair, but like with the casino, the casino wins, right? It's like one big institution, or the buyer wins or whatever, right? Like not the buyer, but the you know, guy in the casino, the gambler. But with the market, I mean, essentially, like, you know, it's so fragmented. It's like all these different little games, right? But at the same time, like someone's losing, someone's winning. Not necessarily the market itself. Like with the casino, like that shit's rigged against you long term.
Always, always. The odds. I mean, all the odds are against you. They built the whole thing so you lose money. Like casinos don't go out of business very often. They make money.
It's like a law.
They make
more people are going to lose than win.
Right.
And those people who win will eventually lose, so we'll keep them here. And then they'll remember like the big lick they hit on like the blackjack table 3 years ago.
Oh yeah. I won like, 3Gs one time.
I'm gonna go back. Yeah.
Yeah, I won 3Gs one time, and they think they're up for 3Gs. Meanwhile, they spent $55,000 trying to get the 3Gs again, right? Like, you know what I mean? It is
just the food and drink and all that too.
Yeah. Yeah, and then think about it. It's just for those that don't know, we're in Michigan, and recently now we can do online gambling, and we can gamble literally in our office. We can play roulette.
It's the worst idea in the world. I can't believe it.
Unless you,
it's a lot of fun.
Are the one behind, unless you own that idea, that's a great idea.
Oh, for sure. It's a great
idea. Own the idea. It's a great idea.
It's a great business idea, but it's a terrible idea for society. I mean, Jesus, so many people are so addicted to gambling. They're spending their last dollars and they're like selling shit to go to the casino. They're taking a shuttle to the casino because they don't have a fucking car because they sold it to go to the casino.
It's bad.
And now they don't even have to go to the casino. They sit at home on their cell phone and waste all their money. It's ridiculous.
I mean, it's kind of fun. Like if you pop a couple $100 in there.
100%.
Like if you lose, you should be done.
Yeah.
And it has on the website,
or you could be like,
I have a problem, and they'll like cut you off, right? But like, who's gonna click that if they have a problem?
Exactly.
I got a message that said
it. Yeah.
I got a message. I was just playing around, but I was playing roulette the other day, and I got a message that said, reality check. It said reality check. You have spent X amount of dollars in the last half hour. And I was like, I should stop. Like, you know what I mean?
Yeah.
It's crazy,
nuts, man. I mean,
what you can do through your phone nowadays is fucking nuts. You can buy stocks, you can buy crypto, you can play gambling, you can there's nothing that we can't do anymore. Play gambling. Yeah. Gambling. You know what I mean? You know, you can do whatever it's crazy.
The smartphone is by far the biggest invention, I think, of all time. Like, there's things that like I think are more imperative to like our industrial society,
saving lives. Right? Yeah, like
cures. But I'm saying, as far as like advancing to the next like shift in the future, I mean the phones are nuts. I got someone knocking on the door here. Hold on, but I'll be back.
All right, go ahead, answer the door. So yeah, these phones do a lot of things, and so my question was going to be, will there be a point in time where, hey guys, Bob Petrillo, let's see what Bobby says. Rob Petrillo, say, hey guys, I'm curious about the recent contracts that the media is saying they force brokers to hand the sign. I read some literature from Quicken about how it created instability among UWM's existing broker channel. How did that actually play out, and what are your thoughts? Interesting, great question,
out.
Rob.
It hasn't played out yet. It's still playing out. I mean, this is going to go on for a while, I feel like.
Yeah, I mean, listen, Rob, just to be honest with you, it really like fucked shit up because we were independent. We could use whoever we wanted. Sometimes we use Quicken. Most of the time we use UWM. They're very good partners of ours. And then we had to like, it's like mom and dad are fighting and we had to like choose who to live with. And it kind of like puts, if anything, I think it hurts consumers because it gives them less choices. Luckily that we have other partners that we can go to and whatnot. But I mean, here's the deal. UWM, United Wholesale Mortgage, offers so much benefit to their people, to people like us, that allows them to conduct business. And they've built a system technology-wise that is very, 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 very good. Very good, right? And Quicken got into the wholesale game a little bit after them, and they're behind in the sense that they don't have the same robust systems on the wholesale side that United Wholesale does. Because of that, a lot of places are almost forced to say, yeah, we're going to go with wholesale. Nothing against them. They have an amazing product. What was interesting is we were forced to basically say, we're not going to work with Quicken because we are working with United Wholesale, but that doesn't necessarily speak to what we believe in as a company, but it does sometimes. We're like hamstrung because the level of service that you get at United Wholesale is so much better. Matt does not like Quicken at all. So I don't know what happened, but Matt cannot stand them. He believes that they're truly bad for brokers. I don't know what that other company did. What was it called, Brad? It was I forget. Whatever. It doesn't matter.
I don't know.
It's how negligent
who cares?
It was Fairway. Fairway Independent got also clipped.
Oh yeah.
And I'm really curious. So Rob, I appreciate that question. I'm really curious to see what is going to happen long term with this. I don't know if there's a lawsuit that's going to pop up. I don't know if Quicken loses a lot of clients because of it. I don't know if UWM loses a lot of clients because of it. I don't know if UWM long term alienated some people that will end up leaving them. Right? Some people might stay with them because they feel like they're forced to. Does Matt alienate people by saying, "Wait, you're making me choose in my business what I do"? I'm being dictated to as an independent mortgage loan officer broker company, and that isn't something that I don't think sits well with a lot of people. Rob Petrillo says, "Caliber ? They suck." Rob, they suck. I mean, Caliber sucks so bad. Yeah, I'm sorry, but they're not good. That's the thing. We try to use. It's not always about the best.
Let's not say they're not good. They are good for. It depends on your business model, right? So there's different lenders out there for different that fit different people. Caliber's model doesn't align with our model. We've used them before, but what they specialize in are loans that we don't specialize in, so it doesn't mesh well. Not to say that they suck. They suck for us, but they may not suck for everybody.
Yeah. Rob laughed. He liked that. Petrillo, we got to go golf again, man. I like that kid a lot. So yeah, I mean, but here's the reality, so people understand. The wholesale business, the broker business, was almost completely defunct because of what happened in 98 and 99, that whole time period. And Matt bet big on the broker market very early and really went after the brokers and really wanted, he lifted that whole broker market up in his mind, I'm sure. But he did a lot of good stuff like that. And then you got companies like Quicken that just came in and tried to like basically feed off that. And now all of a sudden, it's cool to be in wholesale. And Matt's probably like, go fuck yourselves. I've been doing this for years And now all of a sudden you want to come in and like try to take my people. And then like on top of that, he believes that Quicken steals clients and does all this nefarious stuff. I don't know. It's a cutthroat business, man. It's a really cutthroat business. So I don't know who knows what's going to happen. Who knows?
Yeah.
But I know that we go with what is the best for our clients. And right now, UWM is the best process for our clients. And when we're talking about a purchase loan, you want to make sure that that loan closes. And sometimes Quicken is a little bumpy on the purchase side. So we made a decision as a company to stick with what we know is going to work for our clients. I think that's the thing to do. Although I don't like.
Although we're not happy about, we're not happy about having to make the decision. It's not.
No.
It's not like UWM is the perfect situation for every loan that we do. Sometimes Quicken is the better option for our client, and we don't have that option anymore, unfortunately, which we're not happy about.
Yeah,
what it
it's
is.
almost being. Yeah, we're being dictated to. Like I said, we don't love that. But listen, for what it's worth, Matt is building a sweet company, and Matt has done a lot for the broker business. And what it's worth,
ton of great things.
Ton of great things. And they do have a better company than Quicken overall, I believe, on the wholesale side. So, and I can see why Matt, if he believes the way he believes that they're really, really, really bad for our business, that they shouldn't be there. Or if you work with them, that you can't work with him. I in the history of businesses, though, I don't think any business has ever come out and said, if you work with X, you can't work with us.
Yeah, right. It's weird.
I mean, to be fair,
like,
what's up?
Go ahead. I was gonna say,
I was gonna say, it just takes big balls to do that.
Oh, it does. But the shitty part is we're never really gonna, like, both sides are saying, they're kind of both pointing fingers, right? Which is weird because I believe one of the pillars that one of them is we're thumb pointers, not finger pointers, but they're both pointing fingers at each other and they're both making claims, and we don't know what's true, right? Like, and we never will. We'll never know which side is right or which facts are facts and which ones are made up propaganda.
Who's being sincere? Like, who's really not? Like, it feels weird because really who's trying to fuck us? Who's trying to fuck us? Which one's trying to fuck us? Right? And it's like, I don't think Matt is, but I don't think Quicken was either. I think they're all just, they have their business model and they're doing their business model, and that's it. You know what I mean? That's it. Yep. They've got their business model. That's what they're doing. And I've never had a situation where, you didn't let your game do the talking. You know what I mean? Welcome back, Sal. Everything okay?
Furniture delivery. Sorry.
No. What'd you get?
New couch for the basement.
Nice.
But anyway,
nice.
I was still listening. And, to Brad's point, right? Like, there's other wholesale lenders or whatever out there that like for example, like Keller or, some of the other ones that have a retail presence. But I think the whole thing is just that, Quicken took a lot of market share really fast, right?
I think that's it too. Yeah.
From the wholesale standpoint. So it almost, to a degree, right? I guess if you believe the way that Matt believes, right? Like, he sees that as a threat to wholesale in general, being that the retail side or whatever, you're feeding the monster and the monster's getting big, noticeable, right? Like, Caliber isn't going to replace UWM. It's just not. They're good at certain loans. Like, I like sending my government loans there. They have great rates, easy to do loans that are really hard to do elsewhere, but they'll never take the market share that, UWM or whatever has, unless they invest heavily into their technology and personnel, right? They, to a degree, and they're profitable. They found their niche.
But they're already behind the 8 ball on that.
Who?
Caliber. They're so far behind on the technology side.
Yeah, but whatever. Like, they found their niche, right? And if that's profitable for them, that works. But Quicken is coming for the number 1 spot, right? Like, they want it.
Yeah.
And I think that ultimately, like, that's a threat to the broker community if you believe that Quicken is bad, right? You guys were saying, right? I like having the options. I'll send my client to the best experience 90% of the time, but sometimes when experience doesn't matter as much, right, or timing, like, I'll give them the best rate.
Right. And it's interesting because Quicken was winning market share primarily, and one way was they just had better pricing. for a long time. And the conversation I had was they didn't really care that much about making money on the wholesale side because they're making so much money. What's that?
Yeah. Pricing ebbs and flows though, right? Like sometimes UWM was better than Quicken, right? And sometimes Quicken was better than UWM. So like those are things that you can't necessarily like
you can't lay your hat on that forever. Yeah. I agree with that.
Yeah. So there's a whole bunch of different things that I think people need to do to make a good decision one way or the other with that, right? Like really figure out what type of broker are you? What's your business model? You know what I mean?
Mm-hmm.
What is it that you are focused on? And if it's all like a decision as far as like, I do only refinances and I try to give my clients the best rate. Well, you know, UWM is probably not the best place to send your loans anyways, right? Yeah. Like if that's all you care about, but if you really care about like an experience and building relationships and whatnot, like that's where it's almost a little tough because they both are actually pretty good at getting things done, right? But I think overall, like where they're at neck and neck, like UWM trumps them, right? So that's why we
I agree with that.
Like at the end of the day, it's like I like, you know, I like people on both sides of the fence, but like we got to do what's best for our business and our clients. So, but it will be interesting to see, right, how it all plays out now that like the iron curtains fell. Who's going to get fines, right? What's going to happen? I bet there's some brokers out there who are going to say, man, I don't care.
I don't care. Yeah.
Fuck it up.
Yep.
See you in court, right?
Yep.
Mm-hmm. In court. Or they'll say, well, I sent, you know, 70 loans to Quicken and made X amount more dollars. Here's your 50 grand or whatever, right?
Right. Right.
It'll be interesting to see. I don't know. I doubt that would happen, but I know personally some brokers are like, I'm not signing it, dude. I'm not signing it. You know?
Yeah, but they slid that in. They slid in the whole in their agreement. They slid in, just so everybody knows, they slid in basically if you do a loan with UWM, you are automatically agreeing to the contract. So if you close a loan with us, well then we slid into their agreement and you're on board with what you're doing.
You know, is what I mean, as long as people know about it, right? And decide to do what they do, like it is what it is. But like I know some brokers who aren't even signed up with Quicken who just don't want to sign it. Right. But it sounds like they're gonna
see what happens when people get fined.
Yeah.
Right. Yeah. We'll see what happens when people get fined.
I'm interested to see that because like I don't know, whatever. It's a whole other thing.
Yeah. All right. Well, let's end it on that, guys. I think you guys want to do 3 questions between the 3 of us or no?
Sure.
All right. Anybody got a question?
No, I think we know everything about each other pretty much.
Yeah. So let's do something different. Sal, what kind of couch did you get?
I didn't get a couch, man. I had a tummy ache.
All right, so here's a question. What did we eat yesterday that made us so all of us have the bubble guts? We had we had these wings with this sauce on it, and it was called Hot AF. And we're like, oh yeah, that'll be a good idea. Let's have some of that. Sal had like 10 wings. I don't know how the hell he had 10 wings or whatever the fuck he had. And I personally,
they were really hot, man.
Yeah, I personally don't feel great. So, all right. Well, let's just wrap it up, guys. We're going to wrap it up. Thank you all for listening to this show. I know this was just a little bit of a shorter one. We will be back again next week. Please like, subscribe, share, leave us a review. It means a lot to us. If you did like the show and you're still on here, thank you for listening. If you are still on here and you actually don't like the show, go fuck yourself. Bye-bye.
Bye-bye.
We're done. Like, share.
You've been listening to Inside Real Estate, the nation's top real estate podcast. Don't forget to follow us at irepodcast.com and everywhere where podcasts are available.